Holy smokes, this was a huge red day for Tesla, and in this video we absolutely have to talk about why Tesla is at a very dangerous area from a fundamental perspective, but also from a technical perspective as well. Now, I do want to acknowledge that it wasn't just Tesla and Silo that fell down, as we saw the broader markets in the S&P 500 trickle down pretty hard as well, especially as we had a lot of geopolitical conflicts. Again, everyone has to remember that the markets do not like uncertainty, and boy, have we been getting a lot of uncertainty taking place in the overall economy. But although there was a lot of selling pressure for the broader markets, we also had some pretty disappointing news for Tesla this morning. In fact, at 6 a.m. in the morning, I alerted the Push and Profit private group that Tesla announced a layoff of 15,000 employees, revealed by an internal company memo, making it the largest workforce reduction in the history of Tesla. Now, if you're part of the Push and Profit private group and you're wondering how is it that I did a daily briefing at 12 a.m. yet I'm setting alerts at 6 a.m., that's because I don't sleep, right? I literally don't sleep. But the point is, we had Elon Musk, or pretty much this huge announcements of a lot of selling taking place for Tesla, and that was a huge negative catalyst. Now, we did have this memo that I want to go ahead and read of why Tesla ended up doing this. Now, this memo says that over the years, we have grown rapidly with multiple factories scaling around the globe. With this rapid growth, there has been duplication of roles and job functions in certain areas. As we prepare the company for our next phase of growth, it is extremely important to look at every aspect of the company for cost reductions and increasing productivity. As part of this effort, we have done a thorough review of the organization and made the difficult decision to reduce our headcount by more than 10% globally. There's nothing I hate more, but it must be done. This will enable us to be lean, innovative, and hungry for the next growth phase cycle. I would like to thank everyone who is departing Tesla for their hard work over the years. I'm deeply grateful for your many contributions to our mission, and we wish you well in your future opportunities. It is difficult to say goodbye. For those remaining, I would like to thank you in advance for the difficult job that remains ahead. We are developing some of the most revolutionary technologies in auto, energy, and artificial intelligence. As we prepare the company for the next phase of growth, your resolve will make a huge difference in getting us there. Thanks, Elon. Now, some individuals will argue that this is absolutely bullish for Tesla because, of course, if an organization gets much more lean, well, that helps with the financials, because then you see in the income statement, the operational expenses gets a huge reduction. And then also in the cash flow statements, you end up seeing, things in the long term look a lot nicer. However, while that is true, that is bullish over time, it's good to be proactive and make yourself lean. The reality is you don't make an organization much leaner unless you absolutely have to. And this means that this could be an indication that the next earnings report is going to be a disaster, which many of us pretty much already believe is likely to be the case. And so this was definitely bad news with Tesla. But again, it wasn't just a Tesla red day. The overall markets were pretty bad as well, again, with the geopolitical conflict. But to make matters worse, we also had retail sales rise up sharply in the first quarter, which makes things a bit worse, because at the end of the day, yes, we want to see consumers out there spending, but not too much, because of course, that could contribute to inflation and kind of make the Federal Reserve, or the members in the Federal Reserve, raise their eyebrows and perhaps think about these rate cuts and prolonging them even further. And so that's something that didn't really bode too well for the markets. On top of geopolitical conflicts, we're seeing, a lot of spending from the consumers. And one of the things I mentioned is that we kind of need this Goldilocks scenario where we need spending to be stifled, but we don't want to see too many job losses. Well, what we're seeing is spending is still high up there, and that's because there's a lot of jobs. And so we're probably going to be seeing more and more companies try to get much lean, and that's where we are going to perhaps in the future start to see less spending from consumers. But as of now, people are still spending like crazy because at least they have a job. You could be in debt with credit card debt and all these other types of debt, auto loan, whatever, right? But as long as you have a job, you could keep swimming. Now, This also contributed to what we see over here being the 10-year treasury yield continue to climb up. And of course, if you guys have been watching the channel for a while, you guys know that when the 10-year treasury yields are high, well, that doesn't do too well for the overall markets because, of course, there's this equity risk premium. Why would an investor want to hold capital in the broader markets or any particular stock, right? When you have this guaranteed return from treasuries. Treasuries have this high yielding return. And of course, when there's a lot of uncertainty in the markets, well, this is going to cause a lot of people to pull capital from the markets and start to deploy it in treasuries. And so we have a lot of things working at once together, causing the market to fall down, and of course the individual news for Tesla. But with that said, I want to go ahead and hop into my laptop and talk about Tesla from a technical perspective, as well as highlight a couple of other things that we want to be mindful of. But before we do so, just a friendly reminder that if you have not done so already, consider tapping that subscribe button so that you don't miss out on any future upload. And also, while you're at it, consider checking out the links in the description below, because one of the links is a link to join the Push and Profit private group, where every single day the markets are open. I provide a daily briefing talking about what I see going on in the broader markets, as well as some trade ideas. And you also get alerts like what I sent out this morning at 6 a.m. Pretty much with Elon Musk announcing that pretty much mass layoff for Tesla. But with that said, let's go ahead and hop into my laptop. Alrighty, so we are officially in my laptop taking a look at Tesla, and I want to go ahead and touch on why we were at such a critical level in regards to Tesla. But before I go ahead and touch on that, I want to share something I found pretty interesting, showing Tesla's and Toyota's market cap and kind of highlighting how Tesla is close to losing its #1 spot, or the spot as being the most valuable car maker in the world. And so we're seeing Tesla pretty much get close to the market cap of Toyota. Now, we understand that Tesla pretty much crossed Toyota back in 2020, pretty much exploded and had a peak back in 2021, and then pretty much since 2021 to 2022, we saw this massive capitulation in Tesla, which I covered on the channel back in 2022. Then in 2023, I talked about how it was a very bullish year for Tesla, and I talked about it from the beginning of 2023, and that's where we saw Tesla do over 100% for the year, making some redemption, but pretty much for the entirety of 2024, it's been a downward slope, bringing us close to where the market cap for Toyota is. Just some food for thought, or something interesting for you guys to see. Now, I want to go ahead and touch on why this is a critical level from a technical perspective. Now, I know I get a lot of hate in regards to Tesla every time I cover negative news about Tesla, and I'm aware that that's just what comes with, that just comes with the role when you're talking about Tesla from a negative perspective. In fact, back in December 28th, I made a video talking about how Tesla was overvalued from a technical and fundamental perspective. And I stated that we were going to see a lot of selling pressure. People thought I was crazy. They thought Tesla was going to break out to $300 and things were going to be all fine and dandy. Yet that's not what we saw. People ended up seeing Tesla fall down and fall down and fall down. And all through the way, everyone kept saying this was the bottom. And I kept saying that no, it was not the bottom. Then we hit 180, and all the super uber duper Tesla fanboys kept saying that this was the absolute bottom. And I said, look, I want to wait for confirmation of an uptrend and see Tesla close above $204. We never saw that. Pretty much only saw Tesla get close to closing above only 203 and not touch $204. And the reason why I go to a line chart just to show you guys is because a line chart can show you the closing prices. That's why Charles Dow, the founder of the Wall Street Journal and Dow Theory, was a big fan of line charts. I have a whole video talking about that. But anyways, that's besides the point. We never saw that, right? So then Tesla ended up falling even further below. And I adjusted my, area for confirmation of an uptrend only to $200. And I said, look, Tesla is in this area where there's a lot of volume relative to price, meaning there's a lot of pretty much exchange between the buyers and sellers. And until we break above this high shelf of volume relative to price and go to 200, I'm not going to be buying in my long-term portfolio. And I also mentioned that I wasn't going to even be swing trading Tesla in my short-term trading account, because again, trading and investing are two separate vehicles, and that's why I keep them separate. I have a long-term investing portfolio where I do have exposure to Tesla, so I'm not shorting Tesla. I think people get that wrong. I do have shares of Tesla in the long-term portfolio. I just said, look, I'm not buying at these areas. And for a while, I've been getting called a clown. People saying I'm just, I don't know what I'm talking about. Just a lot of mean things. Of course, when you're on the internet, that's just what happens. It's besides the point. But what we also have to acknowledge that is that I said, look, until we close above 200, right? Because I adjusted it down from 200 to 200. 204 to 200. I said that's not when I'm going to look into buy. But I also mentioned that if we fall below this volume shelf, well, then we enter into a danger zone, and we could potentially fall back down to this gap area right around over here, which is around $155. And I've been talking about this gap area for a while now. There's been a few people who've been following the channel who, alongside with me, have been pretty much eyeballing this area and pretty much salivating to add more shares in. But again, just in case people get it wrong or misunderstand what I'm saying, just because Tesla may fall to this area doesn't mean you automatically buy. Again, you still want to wait for confirmation. So if Tesla does end up falling to this area right over here where there's this gap, we want to see if Tesla holds at this area and starts reversing upwards, or we end up falling down even further. And so again, I just want to clarify, doesn't mean we just buy at these areas blindly. We still want to wait for that bounce. But the idea is that now that we're below this volume of shelf, or the shelf volume, we could see Tesla easily fall down pretty heavily and fall down to that $155 area. Now we also have to understand that the fundamentals for Tesla, we're getting an update on that right around the corner as we are starting off the kickoff, or pretty much already started, earnings season, and we know that Tesla's going to pretty much demonstrate their earnings in a couple I would say a few trading sessions away. And the reality is I'm not too optimistic about this earnings call, and I've been saying this for a while. I said it about the last earnings call back on the 24th, and I'm saying it again for the earnings call on the 23rd that we're going to be seeing. I don't think it's going to be great. We've seen Tesla have to cut down their car prices. Again, that's to stimulate demand and kind of fight off the competition, but we've also seen Tesla cut down FSD. I also argued that is potentially good because it helps FSD take rate, and that helps get Tesla closer to autonomous vehicles or fully autonomous vehicles. But the reality is that this earnings report is not going to look that great. And of course, Wall Street is myopic. They're not going to look at Tesla from the long term. They're not, even myself, I'm not pricing in AI or pretty much the robotics. I think Tesla is going to have huge potential for that in the future. But at the moment, we're just, more likely going to experience a really bad quarter. But again, that's going to provide an opportunity in the future. I have just been stating, and I think people get this wrong all the time, that I don't want to buy just now. People are like, oh, why don't you just buy now? You're timing the market. No, I'm actually not timing the market. I'm just simply adding a lump sum in once I see confirmation of an uptrend. And the reality is that the people who are trying to buy thinking it's the bottom, they're actually the ones timing the market. I'm just simply being a bit more prudent with the capital I deploy. Unless you have unlimited capital where you could buy every single dip, then by all means buy every single dip. But I don't have unlimited capital, and so I like to add large chunks when I see trend in my favor or when I see that confirmation, and I haven't been seeing that. And we've been seeing Tesla go lower and lower and lower, and for a while I've been getting a lot of name calls. I even been getting bullied on the X, which is funny. I just started blocking people at this point, but again, I have thick skin. It's part of being on YouTube. But the reality is, hey, look, we have earnings coming up. Earnings are most likely not going to do well, and that's probably going to give us a good opportunity as we get closer over here, because again, looking at this chart, Tesla is getting closer and closer to having a market cap similar to Toyota, and I still believe that Tesla is a far greater company than Toyota, right? However you want to pronounce it, simply because of all the different streams of revenue that Tesla has the potential to grow. We know their energy business is going to grow. We know that Tesla is so far leading in the game for robotics. Of course, we can't price it in just yet, but we know in the future that's going to be a huge factor for why Tesla is going to be successful. But it's just at the moment now, things are not looking too well. And so that's pretty much my view on Tesla. Again, for those within the Push and Profit private group, I'll continue to share my daily trade ideas as well as my overall view on the markets. I already talked about pretty much last night my view on the broader markets and where I see things going. And so again, if you want to have access to that private, daily briefing in that private group, first link in the description down below. You could cancel at any time, by the way, for people who are skeptical of joining. But with that said, hopefully you guys found some value in today's video. Make sure to subscribe and also check out this next video right over here. And I'll see you guys on that next video. Take care, guys.